Tell me about the role of the market in earning season in general. And do you have any special rules when market stays in a narrow range?
So we have different strategies at our firm. So we have an options desk, and our options desk would be quite happy if the market stayed in a range, as long as the range was not too tight. They would clean up. They would do north of 40% on year if that was the marketplace. So that strategy would work really, really well for us. But on our desk, we don't really need the markets overall to move that much because we trade stocks. We trade individual stocks. We trade stocks that are in play. We trade stocks that have a news catalyst behind them. So we're looking for stocks that have unusually good news, or we're looking for stocks that have unusually bad news. We're looking for stocks that have increased margins. We're looking for stocks that have decreased margins. We're looking for stocks that have raised guidance for the full year. We're looking for stocks that have decreased volume guidance for the full year. We're looking for stocks who blew out revenue numbers. We're looking for stocks that missed terribly on revenue numbers. We're looking for stocks that have unusually good news or unusually bad news that the street did not expect. When we see those types of setups, there's big order flow that comes behind it. And they tend to create trends. They create intraday trends, these stocks, and they create 3-day swing trade type of trends. More so than maybe some other technical patterns that aren't so obvious. So we're creating a system for our traders that doesn't require the overall market to go up, doesn't require the overall market to go down, doesn't even require the overall market to move that much, as long as stocks that we're watching are moving. For instance, today, Macy's. There's not a whole lot going on in the marketplace today, but there was a lot of opportunity in Macy's on the open, which we talked about. There was a lot of opportunity in a stock in play on the open because it had really bad earnings. It had unusual news to the downside. It also had a terrible highlight that the street was expecting them to perhaps roll out a REIT, and they didn't. Okay, so we're taking this news catalyst, really poor earnings, surprisingly bad news, and then we're using our trading skills to find areas to trade them short term. So I don't need the market to go up or down to trade Macy's at all. I just know that there's going to be big order flow in that name on that day. So that's how we don't really necessarily have to worry about the overall market.
Please tell me about your new S&B Premium.
So we have a lecture series called SMBU Premium 2016. We've taken all of the lectures from last year in SMBU Premium, and we've archived them, and we present them for you. And then this year, there are 12 webinar lectures that we're putting together on very specific topics that are most important to our trading community. We sent out a feeler, we sent out a questionnaire to all of the people in the SMBU community, many of whom are traders, very, very good traders, and we said, what are the topics that we ought to talk about to help you become a better trader? And the response was overwhelming. They sent us what they thought were important, and we put together 12 topics, which we'll talk about month by month for SMBU Premium 2016 to help people who are developing and people who are new become better traders, topic by topic. And these are topics that are most important for new traders and developing traders, as evidenced by their commitment and the issues that they're having with their trading given to us with their feedback to our outreach. So we're excited about it. It should be a great 12 months plus a bonus of the 12 months before that for traders who are new and developing.